Hello everybody and welcome back. In this section, I am going to be showing you how to record a loan payment. So you received a loan from a bank or from a lender, and you've had the loan now for a month and a half, and it's time now to start paying back the loan. All right, so whenever you make a loan payment, you have to remember that most of the time, if it's a regular, if depending upon how the loan is set up, part of your initial payment, or part of your payment is going to consist of the interest, and the other part is going to be the principal. Now, there are some instances where some companies that loan you money will have you pay the interest up front, have you pay the interest in the beginning, and then therefore everything that you pay after that is considered principal. But you have to read the loan agreement to figure out how your particular loan works, whether or not the interest is part of your monthly payments, or whether or not you pay the interest on the front end or even on the back end, however the loan is structured. It just depends. All right, so in this particular example, I'm going to be showing you how to repay, how to make loan payments that consist of both interest and principal. So the first loan payment we're going to be paying is to super loans, and this is our long-term business loan. All right, so how do we do this? How do we split this into two? So we pay $200, and we'll say that out of the $200, $50 is interest and $150 is actually going back to principal. That's what's going to lower the loan amount. So how you do this is you want to split this payment in two. So you're going to click within the descriptions, and then you are going to click on split. Okay, so you click on split. Now the payee, who are you paying? You are paying super loans. So we're going to go ahead and create super loans as a vendor because we are actually paying them. So we're going to add super loan and vendor. We're going to click save. All right, so super loan is, I believe super loan is our long term, and see I forgot that quick, so I'm going to go back and use that same trick that I used in a couple of lessons, in one of my lessons, where I'm going to duplicate this window so I can go back and see exactly what it is that I am doing. All right, so here is where we are. Now let me go back and look to see if super loans, I think super loan is our, super loans is our long-term liability loan. So what we want to do here is we want to go ahead and we want to choose super loans. So here's the category. So the category is the long-term liability, and we're choosing super loans because that's who we're paying back. Then we could just say payback of loan, payback of principal. Okay, and the amount that we are paying back is $150 because that is a principal. Okay, so now as you can see, we have $50 that has not yet been assigned. This is going to be interest. Okay, so we are going to click on the down arrow and we're going to look for interest payments. What I normally do, rather than just scrolling, you can just go here and just start typing in whatever word it is that you're looking for. So this is interest expense, so interest paid. Okay, but we want to make sure that we aren't applying this to the parent. So let's go back here, and I was about to apply it to the parent. Remember, I always said never apply an expense or a transaction to the parent. Always apply it to the sub. Okay, so we're paying back the business interest loan, and we can just type interest. And it's going to be $50. Okay, so as you can see, the entire $200 has now been allocated. $150 has been allocated to paying back the principal, and then $50 has been allocated to the actual loan itself. And then you can, if there's a memo or something you want to write down here, you can. And then we can go ahead and apply and accept. Okay, so that's how we do that. Now, for a loan payment warehouse, okay, so that came in, and we are going to once again split this payment. So we're going to go down here, and we're going to click on split. Then the payee is loan, I think, was it warehouse? Loan warehouse. So let's go ahead and create a vendor. That's vendor. We're going to save it, and we are going to now look for loan warehouse, and let's see, there it is, loan warehouse. That's who we're paying back, so that's the category. This is going to reduce our actual loan balance, and we're going to go back and take a look once I am done with this. The description is principal payback of principal. Hopefully I'm spelling principal right. I don't know if it's A-L or L-E. It's one of the two. I always get them confused, but you know what? For right now, we'll just leave it at that. And then let's see, 125 is going to go back to payback of the principal, and then we are going to pay interest to the business loan, and this is interest, and we are paying $25 in interest. So now, as you can see, the entire amount, the entire 150 has been allocated, and now everything looks fine. Then we're going to apply and accept. Okay, so now we are going to go look at the loan on the balance sheet so we can see how the principal has been reduced. So let's go down here. Let's click on reports. Let's click on the balance sheet. So the first thing we want to do is we want to change the date range. Now, when we made these payments, in February. Okay, so we're looking ahead. So the payments were actually made February of 2022. So we're going to have to adjust the balance sheet. And the only reason why we're doing all this adjusting is because we are not working in a real account. So when I enter some of these transactions, I sort of just spread the dates out into future months. Okay, so we actually received the money in January, but we started paying the loan back in February. So then we have to go ahead and change the dates. That way we can see, because if you scroll down, you're going to see that the loan amount hasn't changed. It's still $5,000 for warehouse loans, and also you don't see the other loan because once again that loan was recorded on the 16th. So let's go ahead and change this to February 28th, and let's run the report, and now we'll get to see everything. So keep in mind that dates are extremely important. Like I said, whenever something is missing and you can't find something, usually the first thing you want to do is check to make sure that you're in the right date range, in the right period. And also, whenever you change the date, never forget to click run report. Okay, so now we've run the report. Let's scroll down and let's see what we're working with. So now you can see warehouse loans that was $5,000 has now been reduced by $125 because we paid a principal of $125. And then, as you can see, super loans that was $10,000 has now been reduced to $9,850 because we paid $150 on the principal. So now, when we look at our balance sheet, it's telling us that we now owe. We have a short-term loan that we owe for $4,800, and we have a long-term loan that we owe for $9,800. Okay, and then let's look at our profit and loss statement so we can see the interest that we paid. So let's look at the profit and loss statement, and that's going to show us how much we paid in interest. Okay, there you go. All right, so remember the interest was paid in February, so we have to adjust the timing here, adjust the dates, and let us take this all the way to February of 2022. Don't forget to run the report, and let's also not forget to click on cash. Let's just, because our accounting is done on a cash basis. All right, so now you can see, looking at our profit and loss statement, that we have business loan interest expense of $75, which is comprised of the $50 for one of the loans and $25 for the other loan. When you click on that, you can actually see the transaction. So it's now telling you that your transaction type, of course, is an expense. Who did it go to? It went to Loan Warehouse, okay? And it's showing you the bank account that the money came out of and how much was paid. Same thing with super loans. It's showing you that this expense, the name of the vendor, the person that you paid, is super loans. And then this was what was in the memo, interest. And then it's telling you that the bank that it came out of, once again, was Relay for $50. So for the month of February 2022, you paid $75 in business interest loan. So that is how you read that. So that is how you record your loan payments whenever you have to split it between actual interest and principal. I try to help beauty industry professionals transform their financial life. And not just transforming their financial life from a business perspective, but also transforming their financial life from a personal perspective. Because at the end of the day, you know, what we do for a living is what helps us elevate our personal lives, right? It helps us to save for retirement, it helps us to purchase vehicles, it helps us to purchase homes, it just helps us to go on vacation. Everything that we do in our business lives helps better our personal lives.